Hello, everyone, and welcome to UBS Trending. I'm your host, Anthony Pastore. Thank you so much for joining us today. As global markets remain volatile, we look overseas to what is going on in the Chinese markets and the economy there. Are they in a bit of a slowdown? What is in store for Xi Jinping's third term as leader of the country? And most importantly, for those of you viewing here, are there opportunities for U.S. investors in the country? Well, we're going to chat about all of that right now with my guest, Jason Su, Chairman and CIO of Rayliant Global Advisors. Jason, great to see you. Thanks for, I know you just literally flew in from Asia, from Japan, so it's great to have you sitting here in the studio with us.
Thanks, Anthony. Glad to be here.
Good, good. So, look, I know a lot of our U.S. investors out there pay a lot of attention to what's going on in China, whether it's for geopolitical reasons or investment reasons. So we're going to stay with the investment side today. But it seems like China is confronting a bit of a structural slowdown. We know that there's a lot going on. There's the continued lockdowns. There's the change. Well, there's the continuation of Xi Jinping as the leader of the country. But there are some declines expected in GDP as we look after the third quarter report that just came out recently at 3.9% versus what we saw last year. So are you seeing evidence of this when you're looking at the Chinese economy and, of course, the market opportunities there?
So when I think about slowing down, there's definitely the cyclical part, which is we go through global business cycles, right? The U.S. will slow down and it'll speed up. But then what's more interesting is over a long horizon, what do you expect the structural slowdown to be? In every country, and you look at every emerging Asian countries, there's structural slowing down. Why? As you become more developed, as you start to emerge, you get closer and closer to a technological frontier, meaning your gap between where you are and where the U.S. is, it closes. And as you get closer and closer to the U.S., there has to be a structural per capita GDP slowdown. And China is no different than other Asian countries gone before. Japan, South Korea, right? China, as it gets more developed, will have to slow down. We're still looking at projection for next year, part of cyclical, part of structural slowing down, at say, 4 and change. That's a really good number. And I would say over the long horizon, we expect it to go from, where it was, 9% to 6 to 5 to 4. And that's just natural.
Right. Yeah, I mean, you look at the chart at 8.1% GDP in 21, and it was predicted fairly well by the IMF. The International Monetary Fund did sort of predict, although the expectations were a little bit lower at the last reading for China real GDP than expected, 3.9% versus some estimates of 3.2, 3.4. But the thing I think that is something that is a bit of a mystery to the U.S. investors as we pay attention is this lockdown there for obviously, not spreading COVID. And I know we were just talking before we began filming today that you also, when you're there, are in lockdown, just like everyone else who is there as part of the rules of the country. What's been the overall impact when you think about exports out of the country? Is part of this expected slowdown because of that? Can we expect on the U.S. side more inflation hits because of the lack of exports? So it all kind of boils down to what's going on with these lockdowns. And by the way, some experts don't even expect them to reopen again until 2024, as some estimates are showing. So it's a fascinating story.
Yeah, so what's really interesting is we got to remember, U.S. is a consumer-based country. We import a lot, right? We don't manufacture very much. And China is an export-oriented country. So if you look at the inflation breakdown, about a third of our inflation is driven by supply chain shocks. It's hugely driven by the COVID lockdown in China, both the congestion at the ports and, of course, factories running at half capacity. Now, what that means is that accentuates our inflation problem. It actually creates a bit of a deflation problem in China, right? They have excess capacity who can't work. Mm-hmm. We have excess demand that doesn't get satisfied. Now, obviously, the COVID lockdown is going to gradually ease off. I think as they sign contracts to get more vaccine, as they figure out sort of, an easier and perhaps more flexible way of managing that, I think the problem's going to go away. It's going to help with our inflation problem, which is great for us. Our Fed will appreciate that. And it's also going to help with their unemployment problem, right? Mm-hmm. So both countries need it. And I think when it's alignment for everyone to see China's COVID policy getting easier, it will in fact come to fruition.
Right, and I think it will certainly help the U.S. consumer breathe a little bit more easily. Now, we can't, of course, discount that on a completely separate note, the Ukrainian and Russian continued conflict has a lot to do with what's going on with wheat exports and some energy exports. But certainly China is a big player in the inflation picture that we have here in the U.S. So thanks for that, Jason. Let's shift gears a little bit. As we know, Xi Jinping did get announced as the leader for a third term, unprecedented third term for the at the 20th National Party Congress back in October. There was maybe a little bit of selling right after the announcement came in Chinese markets, but two questions. What can we expect from him in this third term? Because at this point, if anything goes wrong, it's all going to be weighing on him, right? And what do you expect the market to do in a third term from Xi?
Well, so first of all, we saw a lot of sort of short-term speculation, basically money coming through Hong Kong into China, and almost domestic speculation as well inside China ahead of the Party Congress. They're hoping for some kind of announcement that's very pro-growth during the Party Congress that was going to immediately drive a bull market. They're disappointed. They didn't hear much of that. They mostly heard about national securities. And so there was capitulation selling, I think, right after Party Congress. But if you understand sort of China politics, you know in a Party Congress year, nothing really happens until the key leadership are all appointed. And we're not just talking about Beijing leaderships, right? We're talking about provincial governors. We're talking about the heads of state-owned enterprises. So what I think people can expect now is, look, now that the election is behind the party, it's really focusing on growth, because that is the KPI for the Communist Party, right? That is what gives the Communist Party its legitimacy, which is driving per capita GDP growth. And so we expect policies that are in favor of growth, that are in favor of key strategic industries to be announced as new leadership arise. And also some government buying, because we talk about the China National Team, which is, kind of government investment funds that sort of lean against the market and sometimes help to be the catalyst for a bull market. So if you kind of stack up all of that, right, the national team buying, new leadership showing up with a lot of policy tailwind behind them, and the fact that, in a way, the stock market is very retail-oriented. It reflects party sentiment, and so there's a desire for the stock market to be sort of more positive, toward the new administration. I think you line all of that up, it's likely we might be beginning to see the start of a bull market.
So so would you say that would be your outlook for 2023?
That's actually our outlook. Yeah. Right? From a tactical perspective, it's that part of the cycle, given the election, and also given how long the market's been sort of in a bear market, right? It was the first equities market globally to really begin declining. Right. And I think it's likely to be the first to be exiting.
And where would you say, if U.S. investors watching today, where are some of the best places that you would recommend they put their money to work if they're investing in China?
So you want to sort of listen to the policy statement carefully, just like here we listen to the Fed, right? The Fed tells you they're going to hike rates, they're going to hike rates. And in China, it's the same thing, right? The government says, look, the strategic industries, green. Green is a big initiative. Xi Jinping has pledged to be carbon neutral. So they're putting a lot of money behind green technology. They're talking about healthcare. They understand they got an aging population. Someone's going to have to take care of the elderly. So it's massive investments. They saw from the COVID delivery that they have a shortage in terms of sort of healthcare delivery in the tier 2, tier 3 cities. So anything that's in the healthcare delivery, long-term healthcare, those are all going to have policy tailwind behind it. And of course, semiconductors, right? There's the U.S. CHIP Act. China's responding to that. So listen to the policy, and generally you're going to get the directions right.
That's excellent, Jason. So it's very similar to our expectations for U.S. markets, especially with healthcare. That's a big initiative for our CIO this year as we look bullish to healthcare for 2023. Jason Su, thank you so much for stopping by. Great conversation. There's so much mystery sometimes when it comes to us trying to decipher what's going on in China, but this was really helpful. Thanks for breaking it down for us.
Thanks, Anthony.
Great. Good to see you. Let's get you back soon.
All right.
And for more information on anything we talked about today, there's a lot of information and content on our website, ubs.com/views. Take a look at that. Plus, we've got lots of other content on our various social media platforms that are on LinkedIn, Facebook, Twitter, and more. Plus, all of our past UBS Trending episodes are available for you to watch on demand. And as always, if you have any questions about your portfolio or anything that Jason and I spoke about today, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. Have a great day, everybody, and remember to keep your eyes on what's trending. We'll see you soon.